Obstacles are placed in your way to see if you really have what it takes to reach your goals. My friends, 10 to 15 minutes each and every day. That is all we ask from you. If you will commit that time, energy, and effort every day to jump into the market, see what's going on, practice trade when there are trades available, learn how to cut your losses, how to run with your gains, how to read Heikin-Ashi candlesticks, trend lines, and volume, you will be gaining knowledge that will serve you so well. Don't worry about how long it takes, because once you master the charts, you'll make up for all the time you ever spent. Practice trading is free, and all we're asking is a few minutes of your time each and every day. If you can't do that, then I just hope you like the sound of my voice, because that's about the only benefit you're going to get from it. You've got to be involved. Pick your favorite stocks. Follow these ETFs with us. Learn by doing. It is not that hard. It just takes commitment. Okay, let's jump into these charts. As the market ended, we see that everything is down for the day. We will start first with the S&P 500, as we almost always do. Down not much, 0.29%. But again, we see things sort of slowing down, leveling up here over these last 3 two-day candles. And for several of the half-day candles, we're still above the weekly trend line. We have a green candle so far for this week. It could change, but don't know that it's going to. We'll continue to watch. We still have 3 more days for these charts to move along. Maybe the market is topping out. It has been so good to us since our little jumping in point here, and the run we have had, just beautiful. In fact, I gave you the calculations that we did on how well things went through these trades at one time. Our 2-day ATR here for our jumping in points, going up here, going down here, then jumping in here and letting the other half of the trade run. It was very, very beautiful. I covered all of that for you, and I don't see the notes I took from doing that. But if you listen to the weekend podcast, that is the weekly review and forecast, I went over all that with you, and it was indeed glorious. Things have been quite nice so far. We look at the S&P and the NASDAQ 100. They will, of course, come to an end, and then guess what? We'll short things like we did right here and made a 2.63% return in just those short 3 weeks. This has been something like 12% over the last several months. It has been just beautiful, and we just let it run. So again, these are practice trades we're talking about. We don't give you any advice on doing real money trades. You don't pay us for that. We don't give that kind of advice. We're an education firm. We want you to get educated with us. Practice all that you need to. Doesn't cost you anything but your time, which is, of course, the most valuable thing you have. That's where we are on the S&P, is slowly just sliding sideways. Could be dying, could be just loading up for more energy to spike up again. Right now, we're still in there. Let's look at where we are on the NASDAQ 100, down about the same as the S&P, 0.23%. Same kind of thing here. We do see that the 2-day chart, as far as this weekly trend line goes, sitting sort of right there on it. Same kind of sideways slide that we see on the S&P. And of course, we've seen the half-day chart move up and down, up and down. That's what it does. But again, 10 half-day charts make a weekly chart. 2.5 two-day charts make a weekly chart. So it's what's so neat about these charts, the reason I love them so much. If you look at these dashed lines here, of course here, and here, you notice that they're the same time frame. They match up and move along. And you can see what is happening on the half day and how it affects or doesn't affect the bigger charts. And it's just what I love so much about the way that all these things work together here at TradingView. It is just glorious. If you don't have a TradingView account and want to get one, you can follow our link in the show notes. And of course, you can also get our training on setting up these 3-wave charts that we have for you. Now, let's look at 20-year bonds. They are really down for the day, 1.91%. Haven't been super excited as things just sort of slid along, but man, they heated up today. We can see down in the morning, booming down, further down in the afternoon, almost 2% on bonds. So going in the right direction. And again, well below the 2-day, on the 2-day chart, on that weekly trend line, well below on the half-day. What about gold? Gold is really slowing down 1.04%. We've seen it sliding sideways and down with, again, spinning top, doji, and then a down move piercing on the 2-day chart, the weekly trend line. Same on the half-day, piercing into the morning, further down in the afternoon. We've got a doji right here on the weekly for the time being. So we will keep, not quite, spinning top, almost a doji. We'll keep an eye on that and see, of course, if it turns in the red and breaches that trend line. In fact, if we went to where things were last week and moved the trend up, you can see where it's already popped through. So keep a close eye on gold if you were trying to jump into that week move up on gold, but we shall see where it goes. Now we've moved on lastly to the Van Eck Bitcoin Strategy ETF. This is an ETF that tracks Bitcoin. So it trades like a stock. You know, you can see the price on it here, not super high. Again, it's set up, pegged to move very close to the percentages that Bitcoin moves. And again, there are some differences, but they're not that much when we compare the two charts. And again, it's just a way you can practice trade Bitcoin. You can follow it, and you don't have to go to an exchange, one of these sometimes maybe dangerous Bitcoin exchanges, Sam Bankman-Fried. You know, so again, this is an ETF that has been, allowed by the Securities Exchange Commission, all those things. And again, it's something that we track because you ask us to. We see that it's up for the day 0.44%. You can see it was way down in the morning, popped up some in the afternoon to be in the green in the afternoon. So this is the only little bright spot we have right here. But again, we're wanting things to pull back in Bitcoin and head down. Why? Because we want our charts to start really being able to work for us so that we can expect to be able to jump in, jump out, maybe even get into there is actually an ETF that's an inverse of Bitcoin. Maybe you could even practice trade that if we can get charts that start being discernible more like, of course, the S&P 500, where you do see green to red, green to red, green to red. Now, of course, a long, long green here, but that's fine. We had a good jumping in point either here or here, and things moving in the right direction for lengthy periods. So again, we want that to happen. And hopefully, at some point, Bitcoin will start doing that. Now, hey, we did a great training for you. If you are subscribed at Charting Wealth, then you have already received it. We have a link in the show notes for that. If you're not subscribed, go to chartingwealth.com, sign up. We never spam or sell that list, and you will get the latest training on how to amplify your success with the volume and the Heiken Ashi candlesticks. It's a great training. I put it together today. I took it from the pages of the book I've been working on to help you fully understand and integrate the 3-wave training system into your daily routine. That is where we are for the day, folks. Always love to hear from you. CW at chartingwealth.com. Thank you, Patreon members, for all your support. If you do want to help us out and appreciate what we do here, do support us at Patreon.